So Grayscale, as you mentioned, we are the world's largest digital currency asset manager. And that's a lot of words. So let's unpack what that means, right? We're an asset manager, which means that we offer products that allow investors to make certain investments. It just so happens that rather than focusing on stocks or bonds or commodities or foreign exchange, our focus is entirely on digital assets. So that journey for us began in 2013 when we launched our first and what remains our flagship product, the Grayscale Bitcoin Trust. Today, as you mentioned, we have 15 different investment vehicles and about $45 billion of assets under management. And so what does that really mean? It means that we were early to identify that investors would want access to digital currencies, assets like Bitcoin and Ethereum and Litecoin, and I'm sure quite a few others that folks have heard of or perhaps have even considered investing in. Mm-hmm. And we realized that because digital currencies have certain attributes that may make them tough to figure out where to buy them or how to hold them or transfer them or safekeep them, well, maybe we could be the conduit to help a lot of investors get access to this ecosystem, but do so in a way that really felt familiar and comfortable for them. Mm-hmm. And so we've packaged digital currencies into investment vehicles. And that's not new, right? Investment vehicles exist for gold, for oil, for subsets of the investment universe, healthcare stocks, energy stocks, you name it. And so Grayscale has really been a really big catalyst for many investors, whether they're retail investors or even institutions who want digital currency exposure as part of their investment portfolios, but maybe don't either have the legal or operational wherewithal to buy digital currencies or hold digital currencies directly.
Which is the majority of the market. And, like you started the fund back in 2013 when the price of Bitcoin was $200. It's now, where is it today? 46,600 US.
Yeah, so I don't know how quickly this conversation will be out in the market, we launched the Grayscale Bitcoin Trust in September of 2013.
Yes.
Speaking with you today in September, what's today's date? Oh wow, we're almost coming up on the 8th anniversary of the launch of the product. We have come quite a bit from that original early days of just focusing on Bitcoin. And now our products, span over a dozen different digital currencies. So been an exciting journey over the last 8 years.
But what was it like to kind of launch back then, when, because in 2013, there was kind of hardly the conversation around the digital space, right, was at the very early stages, right? Like this is before the mainstream started to get into it, so what was it like trying to create an investment fund and to get people on board, for something that just had the promise back then? Like, I'm sure it's easier today, just depending on the date of having a look at the funds under management for Grayscale, it's 30 billion, then it's 40 billion, now it's 45 billion, right? So it's very, very different today. But how was it like in the beginning?
Yeah. Let me talk you through what that journey has kind of been like. So number one, I unfortunately missed day one of Grayscale. Our founder is a gentleman named Barry Silbert, and he started the fund in September 2013. I joined him in January of 2014. So just a couple months. Yeah, exactly. So I'll take you back to then. I left traditional banking. I was working at a bulge bracket bank. Actually, I worked at 3 different bulge bracket banks, and then was looking for kind of my next career move, and got very excited by the opportunity within digital assets, thinking about, Bitcoin as something that could potentially change the world or create financial inclusion. And when I met Barry, I don't know that I'd ever had a conversation with somebody that had really taken a deep dive or even used phrases like change the world or, reconstitute our concepts of money or how value moves around the world. And I was completely enamored by the opportunity. And when I originally joined, my role was really to spearhead our sales effort. We had about $60 million of assets under management. And again, just that one product Grayscale Bitcoin Trust, right? So that's just a passive Bitcoin strategy. And over the years, I continued to take on more and more responsibility and ultimately became CEO of the business at the beginning of 2021. But how conversations have changed over the last 8 years, some of the things that have transpired are things I wouldn't have even imagined. In 2013, I think maybe the only people that were talking about Bitcoin and into 2014 were really, really wealthy entrepreneurs, a lot of folks that were primarily around the technology scene and the software scene. This was coming up in social gatherings, dinner parties, things like that. I think in late 2014 and throughout 2015 and 16, we started to really engage more so with family offices. So again, starting to see a little bit of a groundswell from retail investors, but mostly larger capital was coming from very wealthy families who I think, if I really think about what their motivations were, they were excited by the technology. I think they were realizing that there was an opportunity, a risk reward scenario that maybe didn't exist elsewhere. And then also given how small family offices are, once they have conviction in something, they could actually make an investment pretty quickly. But I think it wasn't until 2017 when Bitcoin kind of broke out to that new all-time high, right? Prior to then, the highest Bitcoin I think had ever been was probably around 1,200 some odd US dollars. And when it broke out beyond that, I think that's when it really started to capture the hearts and minds of institutions. There were starting to be the development of some really interesting trading tools. So indices were starting to get launched. Accessibility started to open up. And, I think for us and a lot of other folks, there started to really be this conversation around institutional adoption of digital assets and what is it going to take to get institutions involved with digital currencies. And I think that's only continued to unravel. As I speak to you today, you now have Fortune 500 companies that own Bitcoin on their balance sheet. If you'd asked me that 5 years ago, if you'd been asking me that 12 months ago or 18 months ago, I'd probably tell you that would be long off. It would not happen so quickly. You have, in the emerging markets, you have countries like El Salvador that have now declared Bitcoin as legal tender. I mean, you really, really have started to see massive participation in this asset class on a global level that has really solidified its staying power. And, despite all the progress, despite all the growth, and even just the growth at Grayscale, which we're of course super proud of, I gotta say, I cannot characterize enough for anyone watching or listening how early days the entire thing still feels.
Still feels that, because it's kind of like the internet. Like, it's back in 2004, 5, like I started to market on the internet and I thought I had missed the wave because everything was like in the 90s and, the .com, the boom and the bust. And the cryptocurrency industry is still at that kind of early stages. And so lots of people still feel like they have missed out because, as at today, it's around $47,000. And so there's a lot of change happening right now. But, so what was some of the earliest challenges, right? Because you had to get the funds first before you created the trust to list, or like you listed first, so what was the first big challenge of actually, to launch this thing?
Well, I'll start out by saying that there is no handbook, there is no guidebook, there is no Cliff's Notes for how to, launch these funds, particularly when it comes to digital assets, right? We've created products now around a totally novel, technology. It's not securities, these are not commodities, these are not FX. And so I think really the power of the way that we've built our business really has been leveraging some outstanding service providers, obtaining some fantastic legal advice, and really never losing sight of what's most important to us, which of course is our investors, and ensuring that we're taking all the proper precautions. But we've definitely had to face a lot of not only challenges, but I'd actually say we've really been the pioneers that have actually set a lot of the industry standards. So that's been things like really trying to ensure that anyone that we may work with for custodying digital currency, underpinning our products, are folks that adhere to certain standards and have certain kinds of reporting, disaster recovery, certain other kinds of redundancies and security measures in place. We've had to really work proactively with auditing firms For them, auditing, different kinds of assets was certainly not something that was new to them, that may be a little less traditional, but they certainly didn't have the familiarity or the comfort with digital currencies and perhaps how to audit those. And so that's been another area we've really had to partner and kind of pioneer some of those conversations and practices. And I really think underscoring all of what I'm sharing is that we as a firm have always taken a measured approach to what it is that we do. We are definitely a ask for permission, not for forgiveness kind of organization, but we do it in a way where, because we recognize the role that we play, it's always been important to us to really educate the people that we're working with, and really partnering with them to try and achieve that agility that is obviously really, really important to operating our products.
Okay. That sounds very complex, which is probably why it took 4 years or 2 to 4 years to really start to gain traction. But you said you started to gain some real traction in 2017. What was it like promoting the fund before that point? How did you approach it?
Well, I think for a lot of investors, they've really been able to find, different reasons why this as an investment resonated with them. I think certain investors saw Bitcoin as a digital gold or a digital store of value. So it may be able to fit in their portfolios as a replacement or a partial replacement for assets like gold or other assets they may own as an inflation hedge or a flight to safety asset, so that their portfolios are protected when markets are turbulent. I think other investors may have been excited about the underlying blockchain technology. And this was a kind of a pure play for them. And they believed in the inextricable tie between Bitcoin itself and the underlying technology, and that owning exposure to Bitcoin would be a more liquid way to execute on that kind of a thesis. I think certainly many investors have long believed that Bitcoin is a new form of money, a new way that value moves, maybe a displacement or replacement of certain mechanisms that we use today to move value around the world. And so I think kind of depending on the type of investor that we were dealing with, and certainly the types of investments that they're historically comfortable making, we were able to kind of find, usually the right analogy or the right, set of circumstances that would get them excited about it. And, at the same time, continuing to really reinforce and, education and doing everything we can to dispel any of the kind of myths that may be out there around the asset class or any, beliefs that kind of bubbled up to the surface that we knew, in fact, to not be true as well.
So in the beginning, and this is, across like a lot of organizations, it's all outbound, it's all, just knocking on doors and and trying to start these conversations. When did the tide change where people started to come to you instead of, you having to go to them?
Well, I think a lot of that did start to occur really in 2016, 2017. For a long time, we were operating Grayscale at a loss. And when we started to get to a significant size, we, had no hesitations prior to earning a profit, running the business, investing in the business. But certainly when we were able to turn the corner and start to achieve profitability, it started to open up the potential for us to have extra capital that we could really emphasize our brand and lean into things like advertising and partnerships. And so being able to, get the word out there about the opportunities that Grayscale offered investors certainly allowed a lot more investors to come to us as opposed to, us having to kind of do outbound sales work as heavily. But I think to one of your earlier questions, something that has also been pretty pioneering about Grayscale is the fact that we have historically and continue to launch each of our products as a private placement. So these are, generally soliciting investments primarily to accredited investors. So high net worth individuals, family offices, hedge funds, endowments, pensions, you name it. And we've done something that's been pretty novel, but again, asking for permission, making use of existing securities laws and regulations, which is that we moved to have those private funds actually pushed out into the public market. And so we now have 6 different products so far out of the 15 products that also trade on the public market every day. And so whether you're here in the US or you have access to the US securities market from other parts of the world, investors have the ability to also participate in Grayscale products right in their brokerage accounts, retirement accounts, you name it. And certainly the success and the receptivity of these products in the public market, I think, has also been a really big catalyst for us that's also allowed us to create a larger groundswell and also increase our investor base. So that's also been something that we've looked back on historically that's been a big part of our business.